You're watching Inside Automotive with Jim Fitzpatrick.
Hey everyone, Jim Fitzpatrick. Thanks so much for joining me on another edition of Inside Automotive, exclusively right here at the CBT Automotive Network. The buy-sell market is still very active and doesn't seem to be slowing down anytime soon. Joining us now with more on this and valuations today is Mr. Willie Beck, who's the co-managing partner of Bel Air Partners. Willie, thank you so much for joining us once again on CBT News.
Jim, good to be here. Thank you.
So, how's your business and this buy-sell market since we last spoke in February? It seems to be still rolling along.
It sure is. We closed 2 of the transactions we had in progress at that point. We've got another one closing in June, and we've got 3 more that will close in September, October. So
wow.
Very, very busy. We're also launching in the next 30 days 2 additional transactions. In fact, Todd and I are flying this weekend to meet with a dealer on Sunday as they want to preserve confidentiality with their employees. So
sure.
We're meeting when the dealership is closed.
That's fantastic. Probably don't want to mention that dealer right now on air, right?
Correct. Yes.
So let me ask you, there's so much out there about the industry kind of normalizing now, getting back to COVID levels, both on the inventory side and also on where we stand in gross profits. We've seen deals being made and dealers having to sharpen their pencils with consumers, which brings down gross profits and such. We also see a time where interest rates are at pretty high. What kind of an impact is all of that having on pricing right now? When you go to a seller, are they a little bit more humble than they were 3 years ago?
It really depends on the deal. And there's certainly a bifurcation in the market occurring where the very best deals are getting the most traction. For example, any luxury store, the Toyota, the Hondas, the Subarus, they're very much in demand. And while we've seen new sales increase slightly, we are seeing some reduced gross margin. Mm-hmm. We're also seeing expenses start to go back up. Certainly floor plan expense is a significant item, but also advertising, employee compensation, all those things are starting to erode overall profitability.
Sure.
But having said that, again, the deals that are in strong demand are getting the top pricing.
Yeah.
Sellers do have to moderate their expectations somewhat,
mm-hmm.
depending upon the deal. In fact, one dealer recently told me, "I think I missed the market," and I said, "Well, you didn't miss the market. The market is certainly down from where it was 2 years ago for your particular brand in your market, but there's still a buyer out there, whether it be a local buyer or more of a regional player."
Sure. Are buyers out there reducing their offering prices? Do you see that where they're saying, "Hey, not so fast. We're not going to step up the way that we were"?
Yeah. Again, it really depends upon the deal.
Yeah.
And for the deals that are most in demand, there's competition for them. We recently took a Subaru opportunity to market, and we received a full price offer. In fact, we had 3 competing full price offers.
Wow.
And so, within a week or 2 of officially launching the deal. So,
oh my gosh.
Again, the very best deals are in high demand.
Yeah. And so in a situation like that, I would imagine you've got just offers coming in. If you're looking for X number of dollars and somebody's willing to pay another $1 million over that or so, then it just starts to become a bidding war.
It does if all the buyers are on equal footing.
Yeah.
Other things that come into play are approvability by the factory.
Yeah.
If they have that same brand, we know they more likely can get approved if they do not. Certainly financing. We typically do not want financing contingencies in our deal.
Yeah.
Generally, the only ones are factory approval. And so we, as part of our job, we need to help advise the seller, our client, on who the best buyer is. It might necessarily not be the highest price.
Sure. When you put a valuation on a store today, where is that coming from? Like, how do you put that together based on the fact that you've had 3 or 4 years of just incredible growth and high profits? Now we see this coming back around and normalizing a little bit. So do you bring in the last 2 or 3 years? Is that a factor, or does the buyer say, hey, wait, not so fast? You're you're showing us a real outlier here.
Yeah, certainly you look at what happened in 2018 and 2019 in terms of expense structure and sales volume. And then you look at what happened in 2023, which generally was down slightly from 2020, 2021, and 2022. And then the biggest factor is, what does the buyer think they can earn on a go-forward basis? So it may be a combination of what happened prior to COVID, what's currently happening, and then again, what's the outlook for the brand in that particular market?
Yeah, yeah, for sure. How is your valuation business? Last time we talked about the fact that you guys have got just a whole division that just focuses on valuations, even outside retail automotive, right?
Well, we don't go too far afield from the core automotive business. In one instance, we valued a real estate company. I have some experience of that from my prior career at Capital Automotive, but also there were two reinsurance companies in there as well. So really anything auto related, we can value. I think when you had Todd on the last time, he talked about trying to stay away from tech companies and things like that. We certainly don't have a core competency in that.
Yeah.
But anything auto and auto related, we can handle.
Sure. Do you ever get the call from a dealer that says, look, not really ready to sell right now, just kind of kicking it around, but if I was ready to sell right now, how much money do you think I could get for my store? I would imagine you get that call, right?
Yeah, and that's part of our valuation services. Yeah. Generally, we're doing formal valuations for IRS reasons or partner buyouts, things of that nature. But occasionally we get a call, as you described, and we get the information from the dealer and work through it. And they should know what their business is worth, particularly if they're thinking about things down the road. That will always help them make better decisions.
Yeah, and succession planning is part of that too. If they're going to be selling the business to their kids or to a trust or what have you, they have to know what that number is, right?
Of course, and again, we work with their advisors, typically their attorneys and their CPAs, to provide our perspective on what that market value really is today.
What percentage of the deals that you bring to the table does the OEM say, no, we're not approving that. We're not approving that buyer? Do you try to get that out of the way in advance?
We really do try to get that out of the way. Certainly no one wants to work 6 months on a transaction and have it held up by factory approval. Yeah. 3 years ago, we did have one brand out of a 6-store group that the one OEM did not approve the buyer, and that did not hold up the deal. We closed with the original buyer, and then we sold the other franchise to another buyer 2 or 3 months later. So it wasn't the linchpin of the deal, thankfully. Yeah.
You mentioned a few of the hot brands that are in demand, high demand right now, Mercedes-Benz and Toyota and some of the luxury cars. What other brands come to mind that you're getting calls for?
BMW, certainly, Lexus, of course, and Land Rover. Those are the
Land
Porsche.
Rover. Really?
So yeah, those are. There are so few of them that really are available. The publics own many of them, and they would be in very high demand by most buyers.
Interesting. Okay, interesting. And then in terms of the brands that you see that are softening out there, would it be Stellantis might be top of that list?
Certainly Stellantis. Some dealers that don't have Nissan are very fearful of maybe exploring that brand right now with their product cadence. Domestics in certain markets, very small markets, it's just that the throughput isn't large enough for someone to make that significant investment. They'd rather do that in a market where they could sell a lot more vehicles and make more money. Of course.
The Nissan story is an interesting one because over the last 5 years it went from nobody wants it, and then everybody wanted it, and then nobody wants it, and then and it's just been kind of all over the map, hasn't it?
It has, and that's not to say that some dealers are very successful with Nissan. It just seems like the ones that we're seeing, have a different story, and it's very hard to see a pathway to significant profitability, given maybe the facility size or the expense structure.
Yeah.
And so a dealer that is successful with Nissan, that might be a great opportunity for them. But a dealer that is looking to diversify and get into Nissan, it's maybe tougher for them to see that pathway.
Right. And talk to us about the second half of the year. What does that look like from your perspective? Will it be as active as we've seen here in the last couple of years?
Really, barring something unforeseen, I think on the interest rate front, we're expecting maybe one cut now by the end of the year. So expectations have been tempered. People are in this environment now, so it's pretty stable.
Yeah.
So we think the outlook is very good. Again, we continue to get calls from people that are exploring, a sale. The reasons for them selling haven't changed. They're just aging out of the business. They don't have a succession plan. So they need to explore what their alternatives are.
Yeah.
And we don't see that slowing down.
Is the EV factor, or I should say, is EVs a factor? Is that ever come up with somebody that says, hey, I think it's time to get out of the business. I don't like where this whole EV thing's going. Is that not even really something concerning?
I think the initial wave, and certainly with the people that we talk to, a lot of Ford dealers, that initial wave of we're through that. Dealers will sell whatever they can sell that their customers want.
Yeah.
And so if EVs are those vehicles, they will sell them.
Yeah.
But the execution just hasn't been there from an infrastructure perspective, and buyers are hesitant to jump into those vehicles. Sheldon, our partner Sheldon's actually at Princeton this week on an EV self-driving vehicle conference sponsored by Princeton University. So next time you speak with him, I'm sure he can speak to that even more.
Absolutely. And did he jump in a self-driving car and just kind of set the coordinates and say, "Here's what"?
I don't think we're ready for that.
We're not there yet, right? We're not there yet. I think everybody thought 10 years ago we would be there by now, but that seems to have gone by the wayside on the self-driving. It's still out there in some regard, but not to the level that that everybody was talking about, right? So
agreed.
Interesting, very interesting. So Willie Beck, co-managing partner at Bel Air Partners, for dealers that are out there that want to get some valuations done on their stores, or ask Willie and his team about the prospect of selling or maybe buying some stores right now. He'd be a great guy to contact. So Willie, thank you so much. Really appreciate it.
Thanks, Jim. Appreciate it.
Thanks.
Thanks for watching Inside Automotive with Jim Fitzpatrick.